Hey, YouTube,
Let's see if this works. Hey, it worked today. Good deal. Hi, everybody.
where we give
It's
you
gonna.
the dish we miss, Devin.
Yeah. No one gets that. Hi, everybody. Must be. Hi, Dr. Nick.
Oh, I missed it.
It's a Simpsons thing.
Target's going sideways right now.
Grindy,
That
grindy.
50% retracement of that morning is right around the yesterday's VWAP at 162.87.
Ah. Yep. Okay.
That's the previous VWAP. That's about that 50% retracement, I think,
Yeah, I was
of our
expecting
big.
a push to like 152 with rejection, but it ended up going all the way to 155 with rejection. And
I
then
saw that.
I was looking to go and run some debit spreads, shorten that, but nothing seemed appropriate. So like the best I
Oh,
could do.
I thought you were looking for the dead cat bounce going long.
No, not with target. I was waiting for the rejection because if you try to catch a dead cat bounce, I mean you can catch it, quickly on opening options, but you got to remember how fast the implied volatility will fade on those things, especially
Right.
after earnings. So it's like,
Right on spreads too, right?
yep. So it's best to wait for a breakover and rejection and short it back down, or not short, but go bearish because you're trading debit spreads on the put side instead of selling to open the stock. In shares, you just do it with the options. Let's see here. Where is key support for that? Around 145. I wish there was a decent setup to get a spread around there, but let me see here. You'd have to go at least to the 25th November expiration, which is next Friday, to have a cheap enough spread to get in there with a good risk to reward ratio. Yeah, I'm just not seeing it. The 144 is like $1.17, and the 145 is like $1.36. So
Yeah.
it's over my 10-cent rule. I'm not going to mess with it.
Looks like old DWAC didn't do very well in that announcement.
Yeah. Is it time to short it?
I don't know. It popped in this morning up to 31.33. Now it's down to 23.67.
Damn, that would have been a great short.
Yeah, the dogs. I think. Yeah.
We could run some time on that thing. Let me see.
NU look like it's NU's coming out of a. What's the NU? Oh, that dog. I can't stand it.
Dogs.
Oh, it sounds like a frickin' fire alarm that's battery needs to be changed.
Oh man,
It's that shrieky.
that's rough.
And about every so many minutes you get that when she wants something.
Ford's looking like it might retrace back down to that 1380.
Hey man.
Hey bud.
So we
What's going on?
gotta get into a little bit more basic options trading, and market conditions are starting to change a little bit where strangles are a little less appropriate. They're still pretty well risk averse, but the way the market's moving, you're not getting a lot of directional pushes that are highly predictable. Like with Ford and American Airlines, we're not really seeing a lot of predictability pattern-wise, other than just watching moving averages, walk around and stuff like that. But let me go
That's a
into a
bummer because I'm
2 hour.
still nowhere near good at them.
It takes a little bit of experience with them to recognize when they're appropriate and when they're not. Not to say you couldn't still use them. It's just that everything's kind of tightening in range, and you start getting into a point where, like here we have the regression line on Ford right now that we're breaking down below. Can we go bearish? Yeah, we can, but the way the market is lately, you never know when it's just going to up and run the other way or just pivot against you. So as far as volatility goes, like typically when you have a good trend or you have a good setup for eventually a breakover like we did when we went bearish on it, great for appropriate trading. And then the ride back up was pretty appropriate too. But now we've met key resistance points and it's likely to just grind on sideways. So it'll tend to eat a lot of theta even in a strangle position. So what do you do with that? Well, the primary reason I was teaching those at the time I was teaching those is because the market was appropriate for it. And it's kind of a good base strategy to start learning so you can get into the wheel trade strategy. Knowing how a strangle works long will really benefit you when you switch to being able to trade a strangle short. And by that, you're selling the options to open instead of buying the options to open. So you're taking advantage of the time decay in that. So you're selling these weeklies and bi-weeklies, and you're holding a long position in the stock and just basically renting out your stock. So that's how this works with the wheel trade. And with something like Ford, that wheel trade becomes appropriate when it does start to go sideways, because instead of trying to chase long on the long options out of the money, you can go and sell them to open and just sit on your hands and watch the time eat them up. You can kind of autopilot the trade in that effect. Or with your experience having legged into those strangles, you can then use that same price action to leg into your short calls and puts, and then buy them back to close them for less than you sold them for, and then rinse and repeat day after day and just generate income on the options as the stock goes sideways. So that's the whole end goal of learning how to trade long strangles first, is to build that ability to then learn how to trade short strangles. And that's what the wheel trade is. You're literally holding a long position in the stock and trading short strangles against it. So at this point, if you wanted to start looking at selling some cash covered puts, that's where you're going to look at the best probability of being about a 2-week to expiration. You'll get the most for them. And the idea is every time you benefit from premium on a short option, that offsets your cost basis in your long position on the shares of stock. So like, let's say you make 20 cents a premium on a cash covered put that you end up either buying back or letting it expire worthless. And let's say you had bought that stock right at $14 a share. Well, that 20 cents you earned takes your cost basis down to $13.80. And down the road, you keep earning premium on this thing. Your cost basis goes down further and further and further. And with something priced around where Ford is, within a year or so, maybe less in this case, with the right options trading, and even if you aren't on the spot for being able to buy back and sell again, if you have to do it with limit orders or you've got to deal with a day job or something like that, over time, within a year, you should be at about a zero cost on Ford, just kind of comparing average premium earning per contract versus price where it's at about now. You should be able to, even if Ford ends up slightly bearish towards the end of the year, be able to keep ahead of any bearish movement, and at the same time be able to make that a zero cost basis inside of a year. So, pardon me 1 second.
Yeah, well, I'm screwed then, because the only way I can grow a big account was with strangle, or a small account was with strangles. So,
Well,
unless I'm buying lottery tickets.
You can
No,
still,
you don't have to do it with just strangles. There's other ways
Right.
to do it. It's just that right now is not the strangle market.
right.
If the market were moving, and it's not right now, we're not getting any movement for options. It's like at where it is at this moment in time right now, you can't really do it. If we were moving, then you could streak, but you
Right.
can't streak. You could scalp, but you can't scalp those options right now.
Right.
So
I don't know how you tell what the market's doing. I don't.
well, that's what we're here for. Right now, the market is crazy, bud. It is like I've had to change everything how I do in
Yep.
the last several months because it has totally changed. And like right now, I'm not even screwing with options. because it's not the market for them. It's not the market to do the options the way you and I can do them with our small accounts in Webull. We can't sell covered calls. We can't sell puts. We can only go directionally. And strangles was a way. I haven't done a strangle in weeks because the market's not giving me that type of indication that that's what we need to do.
Right.
So it's listening to the news and reading and trying to figure out what the hell's going on because I was acing this stuff in penny stocks, but since I changed, and when I changed to options back in April, we were in the middle of a Ukrainian war. We were in the middle of a lot of things happening, changing the market. So it's not been the options market that we had just back in January. So it's with a small account, you got to just kind of inch forward a little bit. Don't hold things overnight, and it's a matter of getting up and looking at the charts, getting the morning brief, reading some sentiment on where the market is, and trying to figure out what range you're in and if it is an options market. But that's what we're all trying to figure out right now. This market is, for me, I'm befuddled. I am just like, I'm kind of dumbfounded and a little shell shocked. So I've had to totally step away this week from options and say, this is not the market for it. And just, it's not that you're screwed. It's just, we got to wait for the market to adjust, and it will. And they're trying to do things now, I guess, by creating 0 days every day. Yep. But even just like right now, trying to scalp the futures is a bitch.
It really is.
It really is. It's like, because there's no real definitive movement, and it has to do with the season we're in. So this is a unique market. It might be just a good time to learn and not actually trade.
And I mean, even I can't stress it enough. Like, developing these tools one at a time instead of sticking to the same tool over and over again. Having a variety of tools to choose from to be able to adapt to any market condition is key. So that's where this led, was learn how to trade strangles long in order to teach yourself how to trade strangles short when the conditions are right. And this is turning into a great condition for the market to start providing some wheel trades. And that was the whole point, is being able to open those options and sell them short. You do need a margin account to do it. You don't necessarily need level 3 options to sell, to open covered calls and covered puts. You can do that, I think, with level 2 options. I'm sure with level 2 options, and I think maybe with level 1 options. I'll have to double check that. But
yeah, I don't think we can do. I don't think we can sell them in level 2.
I looked at this recently, and I'm pretty sure you can do it on 2, at least on Webull. Webull for level 3 opens up your weird stuff like your condors, your butterflies, and things like that.
Okay.
That's the way it seems.
All right, we'll have to go look at that then.
So, long story short, there's a condition and a tool for every condition, and that's just where we're at. I mean, I'm over here, like, my adaptation for the past month and a half almost has been just scalping candle for candle in the futures, because that's where the market was for me. Now it's kind of transitioning into a lull where we're getting a little less volatility, and we're kind of up against an angular resistance too, by the way, on SPY's daily chart. I mean, you just take and draw a line down from that trend top down to here. We're right at that sucker. And just like any other rally in a bull or bear market, you can't trust it till it breaks out of that angular resistance. And it's tried it 3 times. We bounced off the regression line, which is right in the middle of this channel, if you're using your imagination, because I'm not going to draw it. My chart's messy enough already. 375, 376 was about where that regression line was, and we've trended up to the angular resistance from there. Now what? So if there is a break, we know that typically a descending channel on any time frame tends to knock 3 times and then pass through and eventually run for a retracement of about 50% of that whole move. That would put us around 430 in SPY's chart, but not necessarily till it breaks. It's got to break out of that. But usually what you get when you have a descending channel break on a daily chart is it'll crawl out of that angular resistance and then just go sideways for quite a while, just trading in a range. Very typical. So we've got that range mapped out. We're right between about maximum would be about 415, bottom would be about 390. So it'll give us some range to trade. And a lot of equities are going to follow that. And you look at smaller company or smaller equity per share cost companies like Ford. It makes it less appropriate to trade strangles and more appropriate to start wheel trading. If you wanted to build an investment capital and build a sizable account, that's a great way to do it, because you need a little less than $3,000 would put you in a very healthy wheel trade strategy with Ford. It doesn't take a whole lot of money. So in that sense, you can go and start working that with something like Ford. You can go, if you really want to go a little lower, you can start looking at, what was that? Is it Lucid? Kind of in that neighborhood. Lucid's starting to actually produce cars. They're starting to actually find their market. Yes, it's been bearish AF for quite a while, but it's starting to hit that key support area around $11, and maybe
Dang, those control candles.
give us a good opportunity. Which ones?
Ones that were on Lucid, those are some big red bars.
Oh yeah, on that daily and the 2 hour. You can see them sticking out, and it gives us plenty of range. But like, look at the options chain on Lucid. It's way overpriced compared to Ford, just about the premium. And for a little less money, around 2,200, you can do a wheel trade on that. So I mean, it's feasible. Things like Lucid, though, I mean, it's going to be, they're selling cars, but it may be a while before they start to make money. Very similar to what Tesla did. I mean, it came down really low for a while there, and then all of a sudden, things exploded. So it's one of those stocks where you decide, do I take the risk? Do I not? If you've got the capital to run a wheel on it, you'll at least be able to keep up with a moderately bearish market. I mean, like, you could sell premium down from like $20 on this thing and be under the cost basis, under that curve, relatively easy, because the options premium is very high on that stock. But you gotta kind of find a stock that you know is going to be eventually a profitable company, and find a way to make the most income you can on it. And that's what the wheel trade strategy is designed for, is to make as much income as you can on a stock. Finding one in the right price range to meet your account size is going to be a little tricky. So if you've got just even a couple $100 in the account, that's why I'm really looking at what the heck was that thing?
Mullen or
MULN.
Yeah.
Trading around 25, 26 cents. I mean, that's an initial investment like $50 would get you in that if you wanted to try to wheel trade that. It's very difficult to do that particular one, because the lowest strike you have is 50 cents. But I mean, you could sit there and sell repeat 50-cent puts till you get a sign. Just make sure that the premium you earn on those puts is going to get you at a cost basis or a break even underneath the current price. You want to make sure it's going to be around 20 to 22 cents at most per share at this time. The 50-cent covered calls, you'd really have to go out months and months and months to get anything out of that. But you could start building a position on that eventually. And I'm waiting for the thing to cross back above 50 cents before I do it myself. But I'm looking at the range in this thing. It's pretty darn big range, I mean, when you think about it. But it's kind of been flat mostly for a long time now. If they don't do a reverse split or anything like that in the near future, that'll eventually be a worthwhile company to start wheel trading. Just for practice, if nothing else, as it is cheap and stupid cheap. So,
Do they even have a car, or are they just doing designs?
Mullen 5.
I think Mullen is
They're out of California.
Yeah, I mean,
and they've got the Mullen 5. I don't know that I think they have one. They just, I don't know.
Yeah, it's a competitive.
They've lied in the past. They've lied in the past, though.
They have.
No, is this a lot like a Nikola repeat in that regards? Like we have a thing, but we don't have a thing.
Right. Let's look at Nikola too. That's kind of another one. That's stupid cheap too, and it's optionable as well. So I mean, same. If you want to get into that space, a wheel trade is the way to go. I'll have to look at the premium on Nikola. I haven't looked at that in a while, but I think.
My goodness.
Would you really trade a company and wheel it if it had no viable product still?
As long as they're
Cheap
aiming
enough.
for growth and aiming for, eventually having a product that they can make profit on, sure. But take your example with Tattooed Chef. That is kind of where we're looking here. We got to make sure that this is going to at least produce some income while we're riding it down. But it's one of those things where you got to ask yourself: is it a company I would be comfortable investing long term in? That's
Yeah,
what
my
you got to
biggest
ask
fear
yourself.
with Nikola is like they don't even have the hydrogen production facilities or anything
No.
like that. So it's like they have the car, but then they have no way to really fuel it.
Right. And that's
And the car doesn't even work.
look at Plug Power, for instance. That was one that was in the dirt for a long time. They did a reverse split at some point, I remember. But you can kind of look at about the price range and then compare premium. I always go back to Ford to compare premium, at the money or a couple strikes out, and look at how much income I can generate and kind of guesstimate how much time it's going to take me to get to zero cost basis selling that premium. And Ford just stands out over and over and over again. So that's my kind of comparison stock, so to speak. So if I'm looking at something that I think eventually will be profitable, and Plug Power, they're kind of looking into that sector where charging
Morning,
stations
guys.
are eventually going to be the infrastructure buzz. And
Morning, Ricardo.
and if you're looking at the price range on this thing, it's been here before. It's been flat before. It's kind of got that effect where eventually they get some good news or something goes right and they start swinging back up. But it's looking to me like Plug Power at least is going to start forming another continuation in this channel here eventually. So that could be a great wheel trade strategy equity to look at as well. Again, it's going to take a little over $3,000 to put a wheel trade on in this thing, but it's viable. And that's why I got back into starting newer options traders with being able to swing trade strangles like that long. So it sets you up for having the experience to see how those options move, to be able to flip the table and sell those options to open.
Wax on, wax off.
That's right.
I'm confused. It seemed like a week ago strangles are fine. It's like, how do you tell that you can't use them anymore? I don't get it.
Just market sentiment. I mean, it's looking like a lot of our volatility is behind us for the short term, for the next few months, I think. And then
Yeah,
until
how do you tell that? I don't.
just looking at where those moving averages are and also trend lines. Like you can go and look at SPY and just kind of get a canary in a coal mine effect from SPY itself and decide what kind of conditions we're expecting in the near term on the market. And literally, I'll go ahead and draw it. We got this angular resistance right here. It's right in front of us. And typical descending channels like to have that third attempt on resistance before they break out eventually. And I'm going to draw it kind of roughly here. There's the regression line right down the middle. I always put my regression lines in a different color.
Oh, there we go.
Now
Sorry
look,
about that.
we made that accumulation on a regression line. We bounced out of it. We're up against angular resistance. Typically, when a descending channel breaks out, you either A, get a measured move from the regression line to top above, which targets around 430, which is a little outlandish in my opinion. And then we've got these key pivots coming across here, where it's likely to come out of this angular resistance and then crawl around sideways between like 400, maybe max out at 415 and hang in a range between 390 and 400 for a while. It looks to me like the market is wanting to go sideways from here for a while. Just looking at SPY.
Because there's also other things going on. You got the war in the Ukraine. You've got the midterms we just had. Now the market doesn't know what it wants to do. Everybody was expecting gridlock. We didn't get gridlock.
Right.
That the big thing that everybody was waiting for to happen didn't happen. And then we've got interest rates. You've got the whole thing going on with the Fed and inflation. This is. I'm trying to figure it out too, bud. This has thrown me off a little bit with my view of the market, because when I came in, it was highly volatile. Right. And things were moving every single day. You could, my scanners would light up. And I didn't have anything in my morning scanner this morning at all. So it's learning that sentiment is just really learning how to read the chart. It's looking at the daily, looking at the 2 hour, looking at how it's moved in the last 180 days or 360 days, market days. It's keeping up with the, I'm a little bit hybrid now. I use a little SIG stuff by looking at, I'll look at Morning Joe. I look at investing.com to gauge the sentiment to see what we're doing. But it's just been, it's a challenge. And even like right now, I'm sitting here looking at it go sideways and I'm going, I have no entries.
Yeah.
And the ones I did have, I missed when I had to go change the dog. So, but yeah, it's like, this is nuts.
It's
I
back
can
to
tell
that.
it's going sideways this morning, but there's
Yeah.
so much news that could.
Don't pay attention
Right.
too much to the news though.
Yep.
But
Just keep it in the back of your mind, but look at the chart. The chart's going to tell you everything.
Yeah, because the news will get your hopes up, and the news will say it's going to do one thing. It's like they say, if Jim Cramer says it's going up, then short the stock.
Yep.
It's
That's been
it's-
amazing how well it's been working.
Yeah.
Unfortunately, like
Yeah.
I've never seen anyone be so accurate about being wrong.
Yep.
I mean, Sig, he does a lot of stuff. He's like the Wizard of Oz to me.
Yeah.
He's very calm, but he's got all these bells and whistles that he uses, and he's very astute, and so he's gauging the sentiment a lot of different ways. That's why his morning briefings are so great, because you can pull just a little piece of that to figure it out. And then, but reading the right news like investing.com and knowing, the things we look for is what's going to cause a spike in volatility. That's what we're looking for in the news.
Right.
So like yesterday, if you were trading, then all of a sudden it dropped. Everything just this big sell-off just started going, red candles everywhere. And it's like, what the hell happened? And that's
Right.
when we found out that there was the bomb blew up in Poland because the Ukrainians deflected the Russian missile or whatever.
Yeah.
It wasn't a direct attack, but everybody thought Russia attacked Poland.
Yep.
Just went freaking nuts.
And isn't
Nobody
that why you
expected
want a
that.
strangle?
Said, well, no, because who knew you were expecting that kind of volatility?
Right.
You want to strangle when you're expecting volatility, but you're not sure which direction it's going to go in.
There
And
was-
there
You
was
also
no.
want to strangle when there's going to be a really big move that's not just say intraday. You want it to be like a move. Well, I guess you could do an intraday, but that's highly risky and still very expensive. But like you want something that's probably going to make a big move over a course of a week. That way you have time to actually navigate in case you are wrong, or maybe to close a leg to ensure you get some profitability.
Right.
So
Yeah,
why
it's-
wouldn't you put a long strangle on for longer than 2 weeks? And there's so much crap going on in the world. Something happens and it goes one
Okay.
way or the other.
Decay.
That's fine too, but
Theta
that
decay.
decay is going to be the key factor in that. And then also
Decay's going to kill you.
you gotta look at the volatility is low right now, so the chances of those options, expiring into money is less and less and less. So your delta is going to drop with that. So your percentage swings on being able to capitalize on the movement of the market with a long strangle is going to be narrower and narrower and narrower. And if you're not like Johnny on the spot watching your chart all day long, watching your options premium all day long, you're gonna have a hard time swinging that. So it's just the
Right.
conditions are just not exactly right for strangles right now.
And another thing is, just last week, just 1 week ago, the market totally changed on all of us.
Yep.
When they added 0 days every day.
Yeah.
0 days every day. That just happened last week. And so that's changed the market sentiment. That's changed the rhythm of the market. And what I'm trying to do is get used to the rhythm of the market now. It's different.
Right.
So everything is just difficult right now. And for new traders like yourself and guys like even guys like me who came in after the pandemic, I've been doing this for a year and a half now, and it's totally changed. And I'm still trying to gauge the sentiment of those things. I'm not, I'm just a few steps ahead of you maybe. But even experienced traders like Jeremy, he's like trying to figure this out. It's a different world.
It is. And I was
Well,
gonna
I guess it's going to take me a while to figure out how to figure out sentiment and volatility and all that because it makes no difference to me. Everything looks the same except for today. It looks like it's sideways. That's about it.
right.
Yeah. Well, take your time, and it is going to take you a while to figure that out. And that's trading takes a while, and we're up against multi-billionaires who want to steal our money.
Yep.
So they do things to bait us, and we have to be able to learn how not to get baited into that. And learning the candlestick patterns is a great way. I mean, you can see when it's sideways, like right now, but if you go back and you look at the days that it wasn't sideways, and you start looking at those things, and you start seeing the earmarks of trend.
Right.
But it takes time. It takes a lot of time.
So like look at just kind of an example for SPY. Like from 2009 on until the shutdown. I mean, anybody could have made money for a long time in that long bullish trend. It was really easy. Everything made money but SPY puts. And even then you could make money selling SPY puts to open that whole time. I mean, anybody's a genius in that market. And then you go and you look at the daily, and this volatility break once broke bearish, dude. This is really hard to trade, but there's still a tool that's appropriate. Would strangles have been appropriate in this long bull trend? No, because there wasn't enough volatility. But you go and look at this stuff here. Yeah, you've got lots of volatility, you got lots of swings. But what's expected after that third knock on a descending channel like this, like we've been practicing over and over and over again with day trading and even shorter term swing trading, is that on the third knock they tend to drag out sideways outside of that angular resistance on daily chart descending channels like this. So
I would switch to the condor if I could.
right, the condor, or if you wanted to stick with long strangles and use that as a base position, that's fine too. You don't need as much account balance as you would for a wheel trade. There's a way to do that too. You go and look for about 2 to 3 months to expiration on your long strangles, and then just sell out of the money short strangles on a 2 weekly basis against those. There's a little more math involved in that, though. You've got to be able to make sure that if you get a sign on one side or the other, that your cost basis on your long position is lower than the break even on the short position. Meaning, if on Ford you go and you sell a $14.50 call against a $14 long call that expires a few months down the road, you got to make sure the cost basis on having to exercise that $14 long call is less than $14.50. It's very impossible right now, so you're going to have to sell further out of the money. The premiums will be small at first and bigger later. So it's like really tricky to trade a long strangle that far out and then sell short legs against it in the calendar condor or calendar spreads, but it isn't impossible.
Yeah. With a $100 account, I mean, if I can't do strangles, my only option pretty much now is to try and do, moving average bounces or diamonds and try and figure
Right.
out direction and just go naked. I don't have any other option.
Either that or directional. You can go into debit spreads. So that's another possibility. And debit spreads are a great way to minimize your risk as long as you have a swing trading setup. And there's
I can't with my account size. That's the problem.
depending on what you're doing. Like I've been showing examples of being able to do condors and debit spreads that expire. I mean, in the next, at the most, you're getting like 9 days out of them to expiration on SPY, but you can go and find those dollar wides for like 10 cents or less. I prefer about 8 cents.
US DOE EIA
And you can swing those either way too, as long as you got direction.
21.298 mil BBLS. Minus 0.894
Can you do
mil
that on
BBLS.
I don't think you can do that on Webull though. I had to move the Robinhood to do that.
Yeah, you
With
can
a-
do Robinhood to do that.
Yeah.
Yeah,
And you could also trade shares at the very minimum. And if you're only looking at $100 and you get a company that's around $10 and it makes
That's
that
true.
$1 move for the day, that's a 10% return in a day. I mean, you just have to
True.
Right.
be able to see that price action though, because I mean, let's say you don't actually see the full dollar move. If you get the 50-cent move, that's still $5. That's 5% return. That mean there's
Right.
opportunities everywhere, but the problem is you got to have enough view somewhere to see them. And in the case of like the market going sideways, there's still names that are gonna be moving like up and down significant moves.
Stock's moving right now.
Yeah, I mean we're looking at Ford to just drop down, 50 cents since we've been talking, and FSRD at the start of the day was 13 cents. It's now almost doubled in value.
Yeah.
Yeah, I know Ford dropped because I have a call that's dying. So
You carry
Yeah.
a call overnight.
No, I have a strangle on, so the
Okay.
call's dying and the put's
Is it
deep in the
compensating
red.
at least, or
They're both in the red.
Oh yeah.
I would say trading options on such a small account is going to be extremely hard if you're limited with the amount of strategies they let you run.
right?
For me, when I started my options account, it was not horribly bigger. It was a $500 account, but because it was $500 accounts and I was able to qualify for a different level of options, the first thing I started doing was selling an option or buying. Or when I say selling an option, I'm talking about like a straight, short put, or in some cases it was spreads. But because of that concept of decay, I could and getting a little bit of knowledge of price action, because when I first started, I didn't know nearly what I know now. But just knowing, hey, I'm at the top of some band, maybe I'm closer to the tip of the Bollinger Band. That's probably not a good idea to sell a put then. But if I'm down at the bottom, maybe that is a very good idea to sell a short-term put somewhere. And
Right.
I would also sell it against a company that if I were to get assigned or something, it would be a company that I would want to own the shares, and then I could wait a little bit on price to recover and sell.
Yeah, it's
And I try to pick a quality name too, because when you first start your options account, you don't want to play with any garbage names, because you may end up in a situation where you're now owning something that you don't want, or you're just getting something that just collapses because it was a garbage business, and then maybe they followed Chapter 11, and yeah, they're still a company and they're restructuring, but who knows what's going to come out of that Chapter 11.
You mean
Right.
like losing $24,000 in a Robinhood account because you don't understand that you can buy and sell puts and all that other stuff, and you're just buying and selling naked calls, which I did, and that's why I'm starting with $100.
Yeah.
Gotcha.
Yeah,
That's
I mean,
I,
I'm
I was
not
in
too
the
far behind you there. I picked a really dumb company to start my options trading with too, and I'm not maybe that far down, but I definitely am at a paper loss of $19,000 on Tattooed Chef.
No, I turned 8 grand into 24 grand during the pandemic, buying beaten stocks down. They came back up, and then I got into
right.
options and blew it up because I didn't understand that I could sell options.
Right. That's where this experience is gonna teach you, and that's why it's like
Sucks.
best to
Sorry.
have those different strategies and different skills to be able to adapt to any market condition when it's appropriate. So
Sorry, I saw the pop about to happen, and I meant to say it
on what?
on SPY.
Oh,
My indicator gave me a double bottom, not SPY chart, but my indicator gave me a double bottom, which meant it was going to pop, and it did.
nice.
Jeremy, before I go,
Yeah.
I kind of found something I've been looking at. Can you go to the daily on Ford?
Sure. In
Did
fact,
you scalp that stone? Because that was a 50-cent move there.
No, no, I know it was terrible. No, I didn't scalp it. I saw
Nice.
it and I missed it. I saw it and I said, "Oh, it's a double bottom. Yeah, it's
Oh,
gonna pop." And then
You
it
see
popped.
that? You see that diamond right in front of your face over September?
Yep. That whole month.
Okay, so I built it out, and it's getting so the
97.
You know,
I can't explain it because it's not drawn on your chart, but like it's coming up right now to the wedge.
let me throw
Like
this
it
on
should
here.
hit it right around. It should hit it right around Thanksgiving.
In fact, I'm gonna wipe my lines off of Ford real quick and start over. So we'll draw this
That was
together.
a really clean-looking diamond. Wow.
Yeah.
Oh,
And
I
it's
see
it's
what's
there.
going on.
It's either gonna go up to what was it, like 16 something, or it's gonna fly down to back down to 10 something.
Right. And I always stretch these way the hell out. And let's see here. We're gonna draw this
So that-
backwards first.
That right one you're gonna draw after this line, it's coming right up to that point, and that point's gonna hit right around Thanksgiving. Or actually, yours is further than mine because you're better at drawing them. But it looks like it's either gonna go through or come right back down and into that little wedge and
Right.
decide what it's gonna do.
So the range on this move is likely to be somewhere between $12.80 and $14 until it breaks one line or the other. And being that it is after a bearish trend, it's a diamond bottom. I can see that even on the momentum indicator, we're breaking over here, just bearish. We're very likely to at least come down to that angular support first. And yeah, that falls right into about Thanksgiving here. Or there a little bit after.
That looks like a really good condor play, actually.
It kind of does now.
How is it a condor? Oh, because it's got the you can clearly see the resistance and the support on the double bottom.
Right.
Absolutely, and you can see the range where you expect it to be compressed to the point where it has to make a move. So you get an expiration maybe right before that or right at that, and then you close out before it makes that move point.
Right. I think there is a 12.5 expiration, if I'm not mistaken. Let me go double check.
By the way, target's at 155.70, 155.60-ish.
That thing bouncing, I take my eyes off of it, and I'm just like waiting for that.
I know. I told you that 162.87 was the 50% retracement.
I just
Somebody always talking about them dang 50% retracements.
yeah.
They freaking awesome is what they are.
They're money makers. Okay, so we don't have a December 5th. We have a December 2nd and a December 9th. So December 9th would be a little more appropriate. That takes us out. Unless you're selling it to open for credit, which the December 2nd would be better. Let me see if I can plot this real quick on the chain and find an appropriate condor on that.
You've been getting higher highs and lower lows since 1019 on SPY.
So once mid-December comes and it breaks that line to the upside, it's probably safe to assume you could do like a call debit spread.
Don't assume that it's going to break to the upside, because remember in December we're going to have more inflation numbers, and just because we had good ones this last time, the expectation is that we'll have good ones again. If we do not get those good numbers, we are going to crash hard.
Right. And then,
just like because those two. So the way the diamonds work, I'm guessing I'm not good at them. So you have those two lines. One's going up, one's going down. So depending on which way it's going to follow, right around mid-December, I guess, or maybe a little after, you'll be able to tell the trend, and then you would decide. Yeah, I think it's going to go this way, so I would do a debit or a call or put debit spread, depending on that.
There's always two zones to pay attention to on a diamond, and this is that tendency they have to fake one way and then rip the other way. They stay within the confines of their own range. So like you draw your pivots, there's two lowest points that can happen. If it breaks down below angular support, it can run to this one and then to this one. And they can certainly trend on later too, but the other points are going to be your upper resistance. You got about 1648. I'm just kind of being rough with it. And currently, if we slice the M top that broke down first, we got 1472 is another resistance point somewhere in there. So if your diamond's going to break either angular resistance or angular support, you're typically going to see it give a fake out one way and rip the other way. Or in this case, it can also go and fake out one way, fake out bullish and rip bearish. But since it's a diamond bottom after a bearish trend, let's look further out. So there's a couple other things to pay attention to. Where do these pivots line up with our weekly chart range? This is the likely target down here, because we've had essentially this wave and this wave have been repeated. We're at the peak of this wave now. So you can see we're wave to wave. They match, even though this looks like a giant triple top to me. I would say bearish before bullish is the likely scenario, just kind of biased by looking at the weekly chart. You know, we've made this wave here, that's this guy here. And we've made this wave here, that's this guy here. Next likely move is to come down to key support. After that, if it doesn't hold that support, it can remain bearish and run down, but this was a pandemic thing. So the idea is the lowest it could go in this picture, likely in the short term, is down to like 890, which is where this accumulation was before the pandemic. Unless we have another pandemic, we're likely to hold that support. So this diamond can be a little more biased to breaking bearish on about 3 different factors here on a daily and even the 2-hour chart. We're kind of looking to roll over. Yeah. But we do know that the tendency of the diamond pattern to fake one way and then rip the other way is kind of high. So let's say Ford makes a breakthrough on their technology or something in the coming weeks leading into December. Oftentimes, model year production ends in about let's see, for Ford, I think it is October, so that's already going into next year's models for production dates. What if they have some sort of breakthrough where they come up with something great? I know their electric F-150 didn't do so hot. Doesn't tow very well. There's some headwinds there to deal with. We've got the tendency to pop up in that range to hit that high again, and then break over as well. And daily indicators, I mean, you're getting price crosses, moving averages here. There's indications of it possibly breaking. It's really hard to judge a diamond until it starts to break down. And like you go and compare it to SPY, SPY's been pretty faithful with them. And they give you the range pretty readily on those diamond patterns. And look, we can kind of see there's a diamond pattern right here on the daily chart with SPY even. And it did most of its move to the bull side, pulled back, and then continued to make the move to the bull side. So compared to Ford, it can be a diamond bottom for true and actually pull off, a bullish trend and maybe even break some new levels. But in the meantime, there's going to be some volatility in it. If you can time strangles right, you're good. But the likelihood of this going sideways into the second end of this wedge is pretty high right now. You kind of gotta look at it like, okay, what's an appropriate strategy for not being sure about which way this is going to break? And that's why it's like no longer appropriate for strangles, because you're not sure exactly which direction it's going to break or if it's going to break anytime soon. It can sit there and consolidate for days and days and days and burn up a bunch of time. Compared to this wave over here, you're looking at that range. It kind of grinded on here, and then it tipped over to the other side. It took a few days. Each of these candles is a day. So until you can identify where the break is likely to happen, you're kind of better off sitting on your hands or re-strategizing. And this is where selling premium to open rather than buying premium to open is more appropriate. And that's why we're looking at the wheel trade strategy as being the best idea in this situation. With a small account, it makes it difficult. You can try and go with a condor, or even a long condor would almost be appropriate. But you'd have to have enough time on it to where you could take appropriate measures on that move and make some profit. Let me eyeball this for a second here. Let's see, if you wanted to run in a $100 account with enough buying power to make this happen, let me see. Buying the 15, selling the 16. That would cost you about $20 right now. And the put side would be buying the 14 and selling the 13. And we're looking at December 16th expiration. Not a lot of time. That would be about $35 at the moment. So you'd be within your account balance for that, but it'd have to make a significant move one way or another for that to profit.
And I don't know enough to decide which one to do.
Right. So at this point,
I will be good enough at that for a while to do directional trades.
And at this point, is this in a Webull cash account?
Yep.
Okay. So you're kind of stuck with directional anyway. They won't let you do spreads. So the other idea here is, let's go back to the roots and start figuring out price action first. Maybe go and practice trading a share or two of penny stocks on the price action to figure the price action out first. Or if you wanted to, instead of going with options on Ford, you could still day trade Ford. And since you have a cash account, you can do it two ways. You can use day trading options. Just in the morning, you can trade the opening range break, or you had that rejection. You could have went bearish here for a few minutes, make a few bucks on the put, walk away from it, close it, go to work. That's still doable in this account size. Or if you wanted to really get a grasp on price action instead, you could go and just trade a share of it. I mean, it's going to change a few pennies, not much, but you'll get the practice. That's what's important. And if you can make a few pennies while you're practicing, all the better, especially if you're not risking much, So you could trade a share or two of this at a time instead and run with that so that you're not leveraged and you're not having the big swings in your account balance when you get it wrong. It's probably, with your availability being in the morning for the first 2 hours of market time or hour and a half of market time for that matter, that might be the appropriate thing to do, is just to start getting familiar with price action so you can then use that to advance your longer term strategies on whether it's going to be appropriate to trade strangles, wheel trades, whatever we got in store. Go with that.
Yeah, 10-4. What was that green book that's good for price action?
Where was that thing? Stone posted a link to that not too long ago. Stone, you still with us?
I have a TradeAvate account with real data that's like $12 a month that I bought to practice price action on.
That's a great way to do it too. And paper trading the price action on the MES with a paper account is awesome, actually. At least just for the price action experience. And there's zero risk in it. I mean, yeah, you're going to lose $12 a month on the data, but that's better
That
than
beats losing $12 to $50 a day on bad trades.
right. Absolutely.
Thanks, guys. I'm out of here. I appreciate it.
No problem, man. We'll get you there. We'll just got to get you focused on price action for a little while. Get away from the strangles for a little bit.
Yeah, but don't lose heart. Actually, Jeremy and I talked about you yesterday because we didn't want you to lose heart because we know this market sucks.
Yeah.
And it's been difficult. So, and it is difficult. I mean, this is the second sideways day that we've had since we had a sideways day on a Tuesday, which was now a zero day. I mean, that's what 0 days always were for me. They were like, oh, we're going to go sideways at some point. But now it's like every day's a 0 day. So it's having to relearn everything. And it's frustrating when you don't have a lot of time. And the good news that I have for you is this: you got a job.
Yep.
And that means you have income coming in and you can take your time learning this. It's going to be frustrating. You're young and if you can get this down, and if it takes you 2 years, so what? You'll be 40 and you'll be turning your life around. So look at it as a college curriculum, and it's something that you're having to study for. And I believe if you do it right, because I've done it myself with penny stocks where I've lost a lot and then I came back in, and Jeremy knows I came back in. I took a step back and I came back in like a beast, and I got my money back.
Oh yeah.
So and then some, yeah. But the market's different now. I can't even do that because I had to live off that money because of the pandemic and other things and my physicality and so on and so on. But I believe you're going to be able to do this. I don't want you to get discouraged. And again, I do appreciate your service and what you do every day.
Well, thanks, guys.
And I think since you got that paper trading TradeAvate account, I think we'll be able to start setting you up on watching the 1 and 5 on SPY and get you to be able to scalp the ES or the MES.
Yeah, I'm trying to do that right now, and it's difficult right now. I'm not even fooling with it because it's so sideways.
Well, there's a couple of 30-cent moves on SPY here that would have been perfect for a 3-pointer.
They would have been, yeah.
And that's what I can see. Like when we're grinding sideways like this, there's still price action to trade there. And you go into the MES,
at those moves.
it's like
I missed them.
Those 3-pointers can just keep coming and coming and coming all day long in a condition like this. So it's like I said, having the right tool for the market conditions that you have is going to give you the best chance of making profit consistently every day. And having different tools for different market conditions is going to build that. So like you've done well for a while with the strangles. You were able to trade them appropriately in the appropriate market conditions. Now they're no longer appropriate. I
wouldn't say I did well.
Well, I mean, you didn't blow your account up.
No, I did. I'm on my second 100. I definitely blew up my last one. Those Facebook, I should have held on to those Facebook calls.
Oh, that's right. I forgot about that.
I sold them, or else I would have made $400. But
yeah, Any
So,
yellow
and I
smooth
also
on
I
it.
learned to be patient, because if I had been patient, they would have all turned around.
Right. That's the other thing too is patience. But the first above everything, price action. Price action, price action, price action is going to be
There's
life.
a pivot we just broke.
Yes.
Yep, there's another nice. That may actually be a 5-point move.
Yep.
Thanks, guys.
But once you get that price action down, you start practicing it with paper on the MES, dude. You're gonna be blown away at how easy this can be, and just doing it an hour a day before work, dude. You'll be there.
All right. Thanks.
All right, man. We'll see you soon. Have a good day, and thanks again for what you do, man. You're very appreciated.
Yeah, I missed that. You know, sometimes when you're moderating, you know, Jeremy.
Oh yeah, you miss a bunch.
And I'm not moderating. I just
We're here for
I
you.
missed a couple.
You know, that's the thing. I mean, we
We're here for y'all.
make a little bit of money trading, but the primary function of us being here is for you guys. I mean, I can honestly say that I get more out of teaching other people how to do this than I do for myself in trading. So I mean, that's the way I see it.
And I appreciate that. And I think we all do. Y'all just be careful, because if you ride with them like this, you bring in to being a moderator. Be careful.
Yep, I will approach you one day if you got what it takes. And I know I can see that. I can see the talent. There's a few people I'm thinking of already.
Yep.
And when we get to that point where
All
we
right.
got that kind of growth, we will be able to appropriately do so. And this is kind of the philosophy of us. We've always had that motto in the back of our mind, the pay it forward type of community. We teach people how to fish, and then eventually those people that get
Sorry.
it, get good at it enough to trade price action like Stone here, like, hey man, come be a teacher. And at first the argument was like, I think you turned me down twice, and the third time you hit it, because I told you, I'm like,
Yeah, I
look,
think so.
you're at a point where you've got price action down. You can teach this. And I'm going to tell you one thing right now. Once you start teaching it, your learning expands tenfold. I mean, you're literally learning it forward at that point. So you become in a position where you get a little help from somebody with a little more experience at it. And then all of a sudden, you're learning new stuff and you're getting really good at it. And you're teaching at the same time. It makes you a better trader. It makes everybody around you have that ability to grow with you, and that's what being a moderator is all about. It's not just knowing everything and being able to teach it. I don't know everything.
Oh no.
I'm learning every day, but it's at a point where I can learn it forward. I can study this live in front of everybody, learn new things, and be able to teach at the same exact time. That's the glory for me, because it's making me a better trader, making everybody around me a better trader, hopefully. And it just keeps rolling forward, and eventually we'll have some people take those positions where they're getting really good at price action. They can teach price action, and then once they build that level, they'll be right there with Stone. So
Yeah, and what you'll be doing is you'll be letting Jeremy talk and scalping the MES at the same time.
exactly.
Hey Jeremy, can you bring ASTS back up on the bottom right?
Yeah.
I
That
think
was
you'll
a
find that a little bit more interesting
three-pointer.
again.
That was a 3-pointer, baby. Do you know why I got in it?
That broke that angler.
Yes,
Yeah,
we
I
did.
broke that angular support, but I used that 5-minute single moving average. And when we're going sideways, we just hug that thing. Well, we're below it. The last 1, 2, then this past candle, 5-minute candle. Actually 1, 2, 3, 4 candles below it. So one closed below it, and then the next two, all the next bodies were below that moving average, and now we're far away from it. That gives us a little bit of a range. It gives us some movement. It means we could even go back to that mean. But that was beautiful. That's what I was looking for. Thank you.
I think we're getting close to the point where selling a put on that actually might be viable.
Yeah, it's looking like
On
it.
the ASTS.
Yeah, but we're still
Yes,
getting to the point where you're not getting to the point where you're selling below the 52-week low, but you're getting really close now.
Yeah, 650 is about the floor I'm expecting. And
All right, we might be going lower here. We
673 is
broke
where we're at.
the Globex low, by the way, a long time ago. I should have mentioned that.
What's a $6 put going for on this thing? Let's open the chain. My trusty phone for that. And say good morning to the blind trader. SQQQ has been given some nice action. I'll bet the SPY sure is going sideways, but you get those options on SQQQ, man, they can scalp real quick. ASTS. Let me see if I can find an appropriate put to sell on that.
Oh, for those of you who can't trade options or certain strategies on your smaller accounts, you can use those leveraged funds and buy the shares and hold on to it. And what's really nice about that is you don't have to worry about your deltas and your thetas and vegas and all the different the Greeks. You can just sit there and hold on to the share and simulate what you would have done with the option, which is kind of nice. It allows you to stay in a trade a little bit longer.
Absolutely. All right, ASTS, and be careful with this one because it's choppy as all hell. But look at the daily; it generally goes sideways in a big range. So, is it appropriate for wheel trading? If you're careful, yes. I'm looking at $6 cash covered puts. Probably November 25th expiration would be almost appropriate at 15 cents a piece. That puts your cost basis at what, $5.85? Yeah.
Why wouldn't you just go out to December 2nd? You get at least a 10-cent increase on that. Just one more week.
That might be even more appropriate. Let's see.
Yeah, that's second. December 2nd is a great day.
25. That puts your cost at $5.75. That's even better. Plus, I'm looking at the 52-week low too. I want to make sure I'm within that range.
You might also be able to get the 35-cent mid price because right now mid is
right
38. So if you get lucky to get higher than that 25, then that's actually a fairly decent entry.
Not too shabby. Let this trend end first before you do that, though. You want to make sure you're going to get at least a bounce so you can get some of that back. The high for that option so far has been 35 cents, so it has sold at that price a couple times. The volume today is 3. So if you want to really hedge that thing, you could sell it as a credit spread instead.
That was a rhyme. Did you mean it?
I did.
Does anybody want a peanut? And I don't even exercise.
Noise. Yeah, December 2nd. Let me see what the
Okay.
strategy would be for that. Hang on.
395.17 was a previous VWAP. We're between that and 395.51 right now, which was also a VWAP.
Damn, they want
So
too
I want
much.
to see if it breaks the 51.
That would take your income down to like 15
Go
cents.
back down to 17.
Never mind the credit spread. Stuck with the $6 put.
The bid ask still too wide.
It is. 25 and
Put it
50.
here.
That's huge. That's why the volume's so low on it.
Yeah, I would have loved to have gotten in on this, but
Breaks
again,
that.
I still have to wait for everything to clear still from all those bigger name trades that I did.
Right.
I hate that. Like if I have the cash balance still, like why can't I at least trade my cash balance?
Oh, damn. You should be able to on a cash account, but on a margin account it's
WTN, by the
different.
way.
But technically options are supposed to settle overnight, even on a margin account, so that's kind of odd.
Yeah, that is odd. NWTN.
Is that thing moving again?
It's moved a little bit. Yeah, it's moved about 30 cents, 33 cents in the last 1, 2, 3, 4,
Oh,
6,
sweet.
7 minutes. Okay,
Still
so
holding
we're-
some of that.
we're above that VWAP.
Wow, what a
now.
nice move there.
Pivot into that 1 minute pivot.
All right, I'm taking off for lunch, guys. I'll see you guys in an hour.
See you next.
Grace, thanks for hanging out, man. It's really nice having you in the room.
Yeah, I enjoy being able to hang out some of the times. I was expecting to do more paper trading today, but the conversation's been so good.
It's been good learning,
It's
You
been
can tell Jeremy's not trading much.
Yeah, I'm not doing a whole lot today, but it's been a great day to get some stuff out there.
But the good,
Pardon me.
these are great teaching times. So we should be recording it. Dang it! All right, we're on that pivot. So 395. What we're
Yes,
gonna hit?
and it might be even appropriate to have a second Webull account there, man. I mean, it's not going to cost you anything. You literally open up one as a cash account, one as a margin account. Trade them both. You just flip from one product to the other. Like I said, having many tools for the job.
Okay, we're going back to the top of that one. So if I did that, boom, boom.
All right, I need to get on this NVIDIA before it tips over. Damn it.
I'm practicing my Jeremy.
Ah,
That's a different strategy. There's only one that I learned it from. I'll call it the sensei.
there you go. I'm going to see if there's an appropriate YOLO spread on NVIDIA as was requested by CBM over here.
All right, let's see what happens on that 10-second chart.
I've got a target at about 142, just estimating off of that pattern break.
All the way down here. Yeah. But yeah.
16 cents on a dollar wide is not quite cool enough, especially with November 25th expiration. How about dang, I just cannot find an appropriate YOLO spread on that.
It's a crazy market, isn't it? No, that has nothing to do with that, does it?
No. I wonder if a butterfly would work. Hang on. This will be silly.
Wait till we get Casper back in these rooms chatting.
Right? Oh, this might work.
Yeah, I don't know if he's out there.
All right. YOLO would be a butterfly on that thing, but it'd have to be at 142. God dang. Let me try this on the 18th expiration. This Friday would be even better. That'd be close. If you wanted to YOLO something, that's an interesting way to do it. Let's go with the next support zone, 148, though. Let's see here. Sell 2 of those. Buy 1. And 1. If you don't understand
there we
butterflies,
go.
you can learn really cheap.
We look like we're bear flagging now on the ES, on the S&P.
Kind of do.
Well, we still got bodies in the 8, so looking to see if this is a pullback or if this was a part of a fake out.
Well, remember, we've got those 2 key areas. We've got base support, and then we got extension support. And base support's right at 395. Extension support's at 393.50.
Extension support.
On that diamond pattern. I call it extension support because it's just where the 2
because it works.
lower lines meet. Or
You see, that's a pretty diamond. Mine look ugly when I draw them, so they don't work right.
it's just
No, actually, if you just catch the right side of it, you'll be fine.
right. Exactly.
All right. Looks like we're gonna try to come back up and test this pivot at 395.80.
Okay. This butterfly's a little too much risk on it, but if you wanted to do an NVIDIA butterfly, you probably wouldn't get that to fill for 6 cents, but you could try like hell. Friday expiration, you would be selling 2 148 puts and buying the 150 and the 146. And the risk on that would be about 6 cents if you can get it to fill for that cool. It's got to be right at that strike, the body of the strike on Friday. Otherwise, it doesn't make jack. So, very, very YOLO type of play. Yeah, definitely. For the experience, if nothing else, I mean, it probably cost you $6 to $8 to what if. And the way a butterfly trades, ideally, the share price is at the short strike price at expiration. And the idea is, what can I do for comparison? Let's compare that to a SPY strategy real quick. So let me put this on the screen first. I'm going to screenshot this. This is what it would look like on your typical Robinhood account. If I can print this fast enough. Oh, come on, go back to there.
That's what it's all about.
YOLO butterfly. All right. The ratio would be two short. I explained it. 2 short contracts at 148, a long at 150, and a long at 146. This is puts. Let me compare that to a SPY since we have daily expiration now on SPY. And
That's a YOLO put butterfly.
Yep. And
How do you determine the strike prices? Is it by a dollar wide?
price
that's
action?
dollar wide.
Yeah.
That's by dollar wide, though. Isn't that what that would be?
Yeah, that's actually $2 wide.
That's $2 wide.
Yep. So your max profit can be $200 on that.
Is it
Really?
$2 wide because of the 147 and the 149?
Because of the distance between the short strikes and the long strikes is $2.
Right. Okay.
Okay.
So okay.
Let me compare real quick here. So SPY, let's see here. If you use today expiration just for comparison.
Yeah, I see that. That's what I'm talking about. What time is it? 108.
So if you compared this to a SPY position, hang on a second. Today expiration. That same spread at the money, if SPY was trading just above the short strike, you could probably sell that for about 45 or 46 cents. For a $6 risk, that's pretty incredible, but it's so rare that you get that kind of profit out of this situation. And let me roll this up one strike and give an example. I can't really screenshot that because it kind of doesn't come across clear on SPY. You'd have to set it up yourself. But set it up at the money, or even one strike in the money on today's expiration for comparison. And if the short strike goes in the money, you kind of get in trouble with this. But comparatively, if I went and adjusted this to sell 2 396 puts, buy a 398 put, and a 394 put with today's expiration, and this is why you do these a week out, and you got to figure out about where price is going to be to appropriately trade these, because on expiration day is when the action is going to happen. Implied volatility actually kills these things when implied volatility goes up, but when implied volatility goes down, you make profit if it's at the money at expiration. So like if you look at that spread and sell 2 396 today expiration SPYs, don't do this, just for example. Buy the 395 and buy the 390, or buy the 398, buy the 394, and look at the value on that thing with the 2-to-1 ratio. That becomes worth, and that would be just barely in the money right now. That becomes worth about 48 to 50 bucks. So in that range, you've got at the money, either side, or in the money is okay at expiration, but nothing else will really do. Compare that to expiration of tomorrow on SPY, and it's a totally different ball game. So like you go and you would set this up at this point, buy the 397 and the 393, and then sell 2 of the 395s by comparison. that would be worth like $26 right now. Maybe you'd be able to close that around 25, $26. And if you get it right, your risk is like, $6 to $8. And then later on, when it gets to that price level, if it's in the money or at the money, that's where you make your profit. You can sell it the day before expiration, maybe out to a couple of days before expiration. But I'm looking at percentage more than actual maximum profit on this thing. That's where you want to look, because if you're risking 6 and you get 20, that's pretty damn good, right? So imagine if you risked 5 and you got 20. That's a 300% return. And if you do that in something with enough size, you can make some pretty crazy returns. But you've got to realize that this thing price has to be right in the middle of your butterfly to profit. Otherwise, you basically might get back what you risked on it, maybe. So that's how this work.
Okay, 11:11. I'm back. 11:12.
Oh gosh, I hate these stupid bots.
Okay, we got a red-looking spinner below the moving average. We should be going back down again a little bit here.
Can't I block somebody? Hide user on this channel. There you go. Bye-bye. Stupid porn bots. All right. Okay, let's go back to our analysis here a little bit. Hey, no problem. And then, like I said, that's a total YOLO. I mean, I'd probably not trade that just myself, but let's see here. ASTS kind of hanging out. Give that a few minutes. It might become appropriate to sell that $6 put, but I want to watch to make sure it's going to be viable. And NWTN's kind of being, oh, what do I say, froggy? It's got very low volume, but man, it makes some big moves because it's such a low float. And eventually this thing will pop off, I think. It's been flat for a few days now. It had those nasty three-legged measured moves. And it's got to bounce at some point, so we can kind of hang loose on this thing and keep an eye on it. It wouldn't take much to manipulate that, though. So like if big money starts to come in and play with that low float, it'll move. I doubt they will, but just kind of look at it. All right, well, I'm going to sign off YouTube here in a moment and kind of call it a day there. I might break for lunch real quick and then come back for Power Hour. Hopefully we can get strong. And then we come in from time to time through the middle of the day. Casper and everybody is talking about setting up an alert system to let you guys know when we're on for Power Hour. For now, I'll just tag it with @ here in the chat so everybody gets a notion when we're going live. I'll keep it at that for now, but eventually Casper wants to make an alert system to where everybody can be alerted when we're going live in Power, because we don't always go live in Power Hour, but we do try to be here every single morning during the week, so we make that work. As far as spreads go, be careful today, because like we're saying, the market's kind of changing to a point where it's likely to go pretty grindy, so it's going to make options trading a little bit more difficult with SPY having 5 days a week expirations. Oh, that's nuts. However, this will be a great time to start learning how to wheel trade, and in that effect, sideways is your friend. Slightly bearish is okay too. Slightly bullish, even better. So pay attention to the next few weeks as I start to break into teaching people how to trade these wheel trades. That's coming. And we will get through it together, and we will all be hopefully doing very well with it. All right, then, YouTube. We'll see you guys tomorrow morning. We'll be here. And as always, I also make an appearance on Fridays at noon on money.net with Creed. Also, Thursday after hours, around just a little bit after the closing bell, or maybe even through the closing bell, I'll start appearing with money.net as well. And that's where we'll get Stephen Orr, Big Beat, Creed, and guest spots, and myself And what they're doing is they're pitting technical analysis against other things. So like last week we had ChatterQuant on there and kind of just comparing analysis. That was kind of cool because it shows the diversity between price action analysts, technical analysts, and what they do is they look at social media chatter, kind of figuring out what's being talked about, what's being viewed as bullish, what's being viewed as bearish, getting a consensus on the stock for what people think about it. So it's kind of neat to compare price action to that, because what you're seeing in price action itself is how people feel about a stock. You're literally witnessing human emotion in the chart. So comparing the two has been kind of neat. And then I think this week, I guess we were supposed to talk to Mr. Barrios last week, and I think he postponed to this week, if I'm not mistaken. I got to be on board with their scheduling. It's been kind of chaotic, but hopefully we get to talk to Mr. Barrios this week. That'd be really cool. He's kind of the founder for the Facebook version of Wall Street Bets, and it's kind of kicking off, getting a good following. But he comes from the Reddit side of it. He's involved in there somewhere. So I'm going to start becoming a little more active on Reddit. I just started Reddit this year. That's how old-fashioned I am. You can date me. But once I get enough karma or clout with that, I can start making posts on there. I'll be a little more active, a little bit at a time on there, and I'll start messing around and talking to people in the Wall Street Bets community to just kind of feel them out and see how they receive technical analysis in the way that we do it. So it'd be kind of cool to see. Anyway, we will.
Can I interrupt? Can you hear me yet?
Yeah, I hear you now.
Oh man, I've been trying for weeks to get this thing to work. Thank you. I look forward to you guys later.
Yeah.
Sorry.
No worries. Good to hear you. And like I said, I'm just going to take a little break. I'm going to sign off of YouTube. I'm going to take a little break, and then I'll come back and we'll hang out for a little while leading up to lunch here in our Discord channel. And heck, if you don't mind me chewing once in a while, I'll probably just eat lunch while I'm here. So we'll work that out. Anyway, I'll see you guys tomorrow, YouTube.
Bye, YouTube.